Henry Jennings from Marcus Today joins us live via Skype, or actually joins us live from our Melbourne studio. So that explains why you're not here, Henry.
That does explain it, James, but good to be with you even if it's from sunny Melbourne.
Lots to talk about. Can we start with BHP stocks continuing to fall as we head towards a close, down about 1.2%. Look, mine is more broadly under pressure, but your thoughts in light of the quarterly production hit to productivity, derailments?
Yeah, I guess we all saw those great pictures, I think, on the news about that big derailment they had last year when that iron ore train had to be deliberately derailed as the driver got out and then the train kept going. So it's certainly a bit of an impact for BHP. Also, they had an impact in Olympic Dam as well and Spence. So I guess a little bit of a surprise. Everyone kind of always assumes that production is going to be, or the quarterly report is going to be pretty much in line with most analysts. But this came as a little bit of a surprise, I guess. Having said that, you would have imagined that most people would have built that into their numbers. And I guess just gave people an excuse to sell off some of those resource stocks and BHP in particular. But you know, the market's been tired, and we're seeing a little bit more negativity coming out of the press in terms of comments from not only the IMF chief but also from other economists that are heading to Davos. So that's not really helping, but BHP certainly was a little underwhelming, I think, for their production report this morning.
Henry, it's Adam here. How are you today?
Good, mate. How are you?
Yeah, good. I just wanted to talk about some of those numbers inside of BHP. It seems like BHP's hitched their wagon to copper more than anything else. I mean, everything else was pretty much flat year on year or negative, but copper was the one that sort of output. Did you attribute that to sort of their new marketing campaign that they've got going on out there, or is it just sort of what they're focusing on for the next year or so?
Yeah, I guess it's a little bit strange given that the biggest rising commodity at the moment is iron ore. You would think they would concentrate more on that, but clearly they have got one or two issues there. Maybe that's to do with that derailment. But good to see them focusing on copper. Given that we are seeing slowing global growth and not a massive recovery in the copper price, I guess that is a bit of a risk for BHP going forward as they do shift towards that copper focus. So time will tell, but yeah, it was a little bit of a surprise given the strength in iron ore in comparison to the copper price at the moment.
Can we switch to the banks? The big four all under a lot of pressure. There was the Morgan Stanley analyst's note around a potential cut to the CBA dividend. I also thought interesting, I know you've noted it, the first sort of bank challenger, Volt Bank. This is one of these sort of new style neo type of fintech lenders, has got a full-scale banking license from APRA. Pretty significant, I thought.
Yeah, I thought it was quite significant. This is Volt as in V-O-L-T as opposed to a bank vault, but obviously that's a play on words. But this is the first of the neo banks, those sort of quasi fintech banks that has actually got a full banking license. And interestingly, Collection House took a little bit of a stake in the company as well today. They paid around $8.5 million for 4.5% of Volt. It has grabbed the headlines, I guess, in the last few days. And as we head towards the Royal Commission findings at the beginning of February, I guess alternate financial institutions will come more into focus, especially as people get a little bit sick of the established banks. But certainly this was, I guess, a momentous day. It remains to be seen how much of an impact they're going to make. It's certainly very much early days for these guys, but maybe this is a taste of the future. And Collection House have made a bit of a statement in terms of investing in this one as well. So that was an interesting move from them.
Where are you at with holding the banks at the moment?
I don't have a real problem with holding the banks. I have to say, you know, the yields are pretty good. Having said that, they've come off a little bit today and in the last couple of days. I think, you know, there's obviously some concerns about what's going to come out of the Royal Commission, and that kind of gets closer and closer as the week progresses, because next week is a shortened week. So I think there obviously are some nerves about them, and clearly, you know, that report on CBA cutting the dividend wasn't going to help. But these banks are going through a big transformation in terms of where they're positioning their businesses. They're shrinking to greatness. They're becoming far simpler in terms of their business operations, shedding a lot of those businesses. I guess Westpac is the only one that really is kind of continuing on in the old format, whereas the other three are very much changing and selling off businesses and reducing and streamlining. So it's going to be interesting to see what comes out of the Hayne Royal Commission. I suspect a lot of it is already known. I suspect we've also got a little bit too bearish. But who knows? This has been a commission of surprises, and there's no doubt that it's probably got the opportunity to spring one last surprise on us as well.
Anything else catching your eye on the market at the moment, Henry?
Andrew Wyland wouldn't be having too good a day. I know he's been quite a big fan of Wagner's. They had a bit of a profit downgrade, so not such good news for Andrew, I'm afraid. He's a long-time contributor to this program and a buddy of mine, so not such good news.
He's on in about 7 minutes' time, so...
Is he? Well,
yeah,
send him my best. But yeah, it's, you know, the market has had a really, really good rise since Christmas. And interestingly, as we've seen some of this negative talk in the newspapers and hit the headlines again, and volumes are pretty quiet still. You know, there was only 2 billion or so when I left. We've got a shortened week next week. Davos has kicked off, and you know, people love to scare people during these kind of things and talk about you know, the economic downturn and global growth shrinking, and we've had the IMF trying to scare people as well. So I think it's just natural that people are taking a little bit of money off the table after the big rise that we've had. Hopefully we will be able to hold the line a little bit, but I suppose it was significant we didn't manage to get to hold that 5,900 level. I was hoping we'd go to 6,000 and then would be a chance to sell, but maybe we're not going to get to that level, and maybe we're going to back and fill a little bit, wait for that Royal Commission, and of course those all important trade talks which come out. We should see some progress, we hope, at the end of January. I think the Chinese negotiators heading to Washington on January the 30th, the 31st. So with any luck, we might get some good news on that. We certainly didn't get particularly good news over the weekend with the US sort of walking back a little bit, some of that optimism on trade talks around IP issues. So big macro issues again out there, and we did look a little tired. So maybe thin volumes just to exacerbate that a little bit.
All right, Henry, enjoy Melbourne. Thanks for your time.
Thank you. Always good down here. Thanks.
Henry Jennings there from Marcus. Look,